Welcome to Dorchester Advisors. Hey, thanks for joining us for this quick market update about the second quarter of 2026. I think you'll get some useful investment insights. Now, in case we haven't met before, my name is Dushan and I'm the founder and managing director of Dorchester Advisors. Here, we help individuals and families to build solid retirement portfolios that are capable of providing them with enough income to sustain their lifestyle through retirement. Now, the second quarter of 2026 marked another strong period for investors. As we celebrate America's 250th birthday, I am reminded of a quote from Investment Buffett. He said, "Never bet against America." Now, while no investment philosophy guarantees future returns or results, history has shown remarkable resilience of the US economy, of US capital markets, and even global capital markets. In the second quarter of 2026, all the major asset classes were up, except commodities, and they were all up for the first half of 2026. Now, you'll recall that the major asset classes we cover are cash, bonds, equities, real estate, through REITs, and commodities. And this, to my way of thinking, is the entire investable universe available to investors. Now, in this context, US equities performed very well. International equities were also very strong performers. And bonds were relatively flat, but REITs, real estate investment trusts, were up modestly. The outstanding performers of quarter two were the small cap US stocks and the emerging market equities. Now, no one knows consistently which market segment will lead next. So a diversified portfolio allows investors to participate wherever the opportunities occur. Now, one of the questions I am hearing frequently is, markets are at an all-time high. Should I be worried? It's a reasonable question. Now, many investors assume just because the market has hit an all-time high, a decline must happen and it must be imminent. Reality is a little bit more nuanced. Look, markets have spent much of its history reaching new highs, although interrupted by periodic corrections, bear markets. But the important thing to remember is that these declines are uncomfortable but temporary, and they are part of normal investing. Consider the perspective. About 100 years ago, the Dow Jones Industrial Average was 60 points. Today, it's 52,000. Now, the long journey from 60 points to 52,000 over 100 years included recessions, wars, inflation, financial crises, political crises, and all sorts of other corrections. I mean, for example, recently we lived through COVID and the great financial crisis. Yet, patient investors who stayed invested have come out doing remarkably well. So, our investment philosophy of being sensible and prudent and biased towards equities continues to guide how I manage portfolios. So rather than attempting to predict short-term market movements, which I think is hard to do, I focus on building diversified portfolios designed around clients' specific objectives. So for clients accumulating wealth, the emphasis is on long-term growth while managing risk through diversification. For retirees who depend on their portfolios for income, I deliberately allocate a small portion of the portfolio to liquid and conservative investments to get the cash flow they so essentially need, and hence avoid being a victim to short-term market fluctuations. Look, every client has different circumstances, different risk objectives, different risk tolerances, different cash flow needs, different tax considerations, and even different legacy goals. That's why one-size-fits-all investing simply doesn't work. I think customized portfolios and customized financial plans are the better alternative. So we construct portfolios to benefit from broad and global opportunities in asset allocation. For example, our equity investments provide exposure to many hundreds of companies across industries, sectors, countries, and different market sizes, from small emerging companies to the mega established companies. Why? Because no one can consistently predict where tomorrow's investment returns will come from. And proper diversification allows my clients to participate in growth opportunities without relying on a single market or a single stock or a single investment theme. And this, combined with a disciplined, cost-conscious portfolio management approach, I believe remains very effective to navigate many market environments. And I invite you to download my complete Q2 market review. If you want more details, it's available on our website. So if recent market movements have raised questions about your investments, your retirement income, your overall financial plan, this is probably a very good time to do a review. And if you'd like an independent second opinion on your portfolio or financial plan, I'll be pleased to have a conversation. Thanks again for watching. I invite you to look through our website, and if our philosophy and approach resonate with you, hey, give me a call. No obligations. I love talking all things investing.